You pay rent every month without thinking twice. You pay your electric and phone bills on time, dutifully. What if those everyday payments could quietly power up your credit score? Today, we're pulling back the curtain on a financial revolution. Rent reporting and utility reporting, the tools that let ordinary bills become extraordinary credit-building assets. By the time we finish, you'll know which services actually move the needle, which scoring models accept these payments, and exactly how to turn your monthly bills into permanent credit gains. First, the simple truth. Traditional credit scoring was built around loans and credit cards. If you paid your rent or utilities on time for years, that reliability often never showed up on your credit file. But that's changing. A growing number of services and scoring models now allow on-time rent and utility payments to be reported to the credit bureaus, and those positive payments can improve your score, especially if you have a thin credit file or a history with few trade lines. What rent reporting actually does. When a rent reporting service submits your payments to a bureau, those payments can appear as a trade line on your credit report. Positive payment history that complements the usual credit card and loan data. Some platforms report up to 24 months of prior on-time rent payments, which means you may get immediate scoring benefit from years of responsible behavior. Which services make this possible? There are 3 common pathways. 1. Your landlord or property manager partners with a reporting intermediary and reports payments. 2. You enroll directly with a rent reporting company that verifies payments and reports them. Or 3. You use consumer tools that connect to your bank and add rent, utilities, and even phone payments to your Experian file. Each route has trade-offs. Landlord-based reporting often includes retroactive history. Tenant-initiated solutions may charge fees. Experian Boost is free but works only with Experian and requires bank connectivity. How much impact can rent reporting have? The impact varies. For people with thin or limited credit histories, adding consistent rent payments can yield meaningful point gains. Studies and service reports show average score increases in the tens of points for eligible consumers. For someone already at a high score, the lift is smaller but still useful in edge cases. For instance, pushing a borrower from a poor to a fair bracket or enabling loan approvals that were previously out of reach. Why utility and telecom payments matter now. Alongside rent, technology platforms now allow utility, cell phone, and even streaming payments to be added to credit files. Experian Boost, for example, lets you grant secure access to your bank transactions and then counts eligible recurring payments toward your Experian credit file. That means bills you already pay can become positive signals on your report, often immediately. For many consumers, especially renters and young adults, exploding that invisible payment history into visible credit data can be a game changer. Which scoring models accept these payments? This is critical. Not every scoring model treats rent and utility data the same. Vantage Score and newer versions of scoring models have explicitly accounted for alternative data, like rent reporting, in order to better include consumers with limited credit histories. FICO historically has been slower to incorporate non-traditional data, though newer FICO models and pilot programs have begun to consider alternative payment history in some contexts. The net result: if you want your rent and utility payments to translate into loan approvals, understand which score your target lender uses, Vantage Score or a specific FICO version, and choose reporting channels aligned with that model. Real policy momentum. Why this matters now. Policy and industry research increasingly support rent reporting as a pathway to broaden credit access. Think tanks and policy groups argue that including rental payment history in underwriting reduces disparities and helps otherwise credit-invisible people qualify for mortgages and other credit products. That means the shift isn't a niche hack. It's moving into mainstream underwriting conversations, and lenders are updating their practices accordingly. Common questions answered. Will reporting rent hurt me if I pay late? Generally, reputable rent reporting services focus on reporting positive, on-time payments. Some won't report late payments unless the landlord submits a negative record or sends the debt to collections. That's why understanding the vendor's policy is crucial. Some services report only positives, while others mirror the landlord's reporting, including late payments and evictions. Do your homework before enrolling. Does Experian Boost help everyone? Not necessarily. Experian Boost only affects your Experian file and the scores derived from it. Lenders often use multiple bureaus and scoring models. However, for consumers whose reports lack positive trade lines, Boost can provide a fast, free lift because it turns everyday payments into verifiable history. How to pick the right rent reporting path. 3 practical selection rules. 1. Prioritize services that report to all 3 major bureaus, Experian, Equifax, TransUnion, whenever possible. This maximizes the chance lenders will see the benefit. 2. If retroactive history matters, choose providers that can pull up to 24 months of prior payments from property records. 3. Avoid services that will report negatives without a dispute process. Prefer vendors that report positive payments and provide transparent terms and fees. A simple playbook to get started. Step 1. Check your current reports and see if you already have any rent utility trade lines. If not, ask your landlord if they partner with a reporting service, or enroll yourself in a tenant-initiated program that reports to bureaus. Step 2. If you have a bank account with stable debits, consider linking to Experian Boost to see immediate eligibility for utility and phone payments. Step 3. Monitor your reports monthly. Small changes will tell you whether the reporting is working, who benefits most, and who should wait. Rent and utility reporting most dramatically help. 1. Thin-file consumers with few trade lines. 2. Renters who have long histories of on-time payments. And 3. People rebuilding from past events. Collections, short credit history. If you already have a robust credit mix, multiple long-standing loans and low utilization, the incremental gain will be modest. Also, watch for costs. Some reporting services charge monthly fees. Run the math to confirm the ROI compared to other credit building options. So yes, your rent and utility payments can absolutely boost your credit, but it's not automatic. It requires the right channel, the right scoring model, and smart enrollment. So now you understand the why behind rent and utility reporting. But let's move into the how. This is where theory becomes practice, where those monthly payments you've always made in silence can start shouting on your credit report. Let's break down the tactical steps, the top services, and the exact moves you can make to ensure your bills build your score, not just drain your wallet. Step 1. Audit your current reports. Before you enroll in anything, pull your credit reports from all 3 bureaus, Experian, Equifax, and TransUnion. Check whether your landlord or service providers already report rent or utilities. Some larger property management companies already partner with reporting platforms. You may already have positive history you didn't even realize was working in your favor. If nothing's showing, that's your green light to add it yourself. Step 2. Know your reporting options. There are 3 major routes. First, the landlord route. Ask your landlord or property manager if they participate in services like Isusu, RentTrack, or ClearNow. These services can often pull up to 24 months of prior rent history, giving you an instant head start. Second, the tenant-initiated route. Sign up yourself with platforms like Self or Rent Reporters, which verify your payments and report them. Third, the tech-enabled route. Tools like Experian Boost or UltraFICO, which allow you to link your bank and instantly add utility, phone, or streaming payments. So here's the takeaway. Your rent and utility bills are no longer wasted effort. They can be weapons for credit growth if you use the right services. Start by checking your reports. Choose a service that hits all 3 bureaus and turn your monthly payments into proof of your reliability. Don't let your financial story go untold. For more expert strategies on credit repair and building financial freedom, visit wiseconsultant.com and subscribe to this channel right now. Your path to a stronger score doesn't start with a new loan. Wise Consulting Enterprise. We could help you in such.